A few moments ago, we heard about Ireland's debt crisis from the country's finance minister, Brian Lenihan. He's here in the U.S. trying to get U.S. investor support for that country. For reaction to that and broader perspective on the debt issues in Europe right now, we're joined by Chief European Economist from Barclays Capital. That's Julian Callow. He joins us live from London. So, Julian, if I at the debt markets this morning, it looks like fear is still there, but it's less of a concern. Spreads coming in a bit when you look at German Greek debt and when you look at Irish debt as well.
Well, that's right. I mean, I think really it becomes harder and harder for investors to avoid some of the high-yielding debt in Europe. Really, if the Fed is going to be going out there and buying large quantities of US Treasury bonds, as we and as the markets expect, then investors have to hunt around for yield. And it does appear that the European authorities are very reluctant. They will try to avoid at all costs some form of debt rescheduling. So even though maybe people feel instinctively that there's a lot of risk attached to some of these high-yielding European markets,
right,
it does become harder to stay out of them.
Well, Minister Lenihan was here with us. I mean, he mentioned, not going to the bond markets because they have enough cash, he says, through 2011. Yep. But when it comes to being able to avoid going to outside institutions like the IMF or European Institution for Funds, how confident are you that Ireland won't need to go there and Greece won't need to go back for more help?
Well, let's deal with Ireland first. Very tough call, to be honest, on that particular point. In some respects, it looks like Ireland does really need that kind of assistance. Politically, the government is having difficulty assembling enough votes for the next budget. If you look at the deficit situation of Ireland, excluding the bailouts, the deficit's been standing still, really, as a share of GDP this year, and really no different from where it was last year. In other words, just under 12% of GDP. So
Minister
it really seems like there's a strong case for external.
He thinks he has the political will and the majority to get through his
well,
budgets.
Exactly. It's all down to the politics, really. But Ireland does need to undertake some enormous fiscal adjustment in the next couple of years if it's really going to give the markets confidence that it has got its government debt to GDP ratio on a sustainable path, and it needs to see some good evidence of economic recovery, and that's coming in a bit fits and starts at the moment. So
right,
to be honest with you, it's a difficult trade-off for Ireland. On the other hand, of course, there's a big stigma about going to the IMF. Governments are very reluctant to for domestic political reasons, and I suspect that's really a considerable part of what's been holding Ireland back. So as you say, it all boils down really to the politics, and we'll just have to see how that's going to pan out, because it is going to be very, very difficult. Ireland has tried. It had a tough budget last year,
Julian,
and yet fiscally it stood still.
What's interesting here to me is that Ireland's being viewed as a test case for the austerity argument versus the stimulus one.
Yeah, I mean, that's right. And I think there are shades of that, in Portugal as well. Portugal is another country that has already tried this year to crack down on the fiscal side. But it's actually having very little progress there as a share of GDP. The deficit in Portugal is still running at around 9%, which is the same as it was a year ago. So these countries, the harder they try to crack down, tighten up fiscally, then the more that seems to impair their domestic demand, with the result that they don't have a lot to show for it. It's only somewhere like Greece that's got an overwhelming 7% worth of GDP of fiscal tightening this year, where perhaps you can see some more conclusive results. But of course, Greece had such a difficult fiscal situation anyway. It was always going to be relatively easy to take the first steps to reduce the budget deficit there. So I think that debate is going to be really well and truly with us in 2011 and beyond in Europe.
All right. Thank you, Julian.